An interesting day, particularly when you put it up against what we saw yesterday. You pointed this out earlier here. We had a broad-based rally yesterday with about 80% of the S&P stocks higher. Believe it or not, we kind of had a broad-based rally today. It just didn't actually translate into actually broad-based gains. About 80% of the S&P stocks were higher on the day, but the big drag of big tech, that was not enough for the aggregate market to do anything. You see that really reflected in the NASDAQ 100, the big laggard on the day, down about 2.2%. But look at the differential there with the Russell 2000, a 3.5% gain in the Russell, the best day of the year for that index. But that differential here, 5 percentage points, we haven't seen that type of differential between the small caps and the big caps going back to the pandemic, the start of the pandemic, March of 2020. A lot of that had to do with the big drop that we saw in yields, down about 11 basis points on the short end, a sell-off in the dollar as well, Scarlett. And you wonder if this has changed the complexion of what people are going to buy and what they're going to sell.
Yeah, everyone was waiting for so long for the broadening out of the equity market strength, and we finally get some, but the indexes show deficits. Now, one big reason why is because of what happened with the Magnificent Seven. Let's start with Tesla, which was the worst performer of those Mag 7 names, losing more than 8% on the day. It was the most active company stock by value, and it had gained earlier, but Bloomberg reported that Tesla is now delaying its planned robo-taxi to October by about 2 months. So the initial plan was August 8th. And of course, this is the unveiling of the robo-taxi. It doesn't actually mean that it's going to be on the roads. Optimism about the robo-taxi, and of course, just things that Elon Musk was kind of hyping, had led to an 11-day rally for Tesla, which added about $257 billion to its market cap. Now, Romain mentioned small caps. Let's take a look at a small company here. Lantheus Holdings, LNTH, up by almost 17%. This is a fresh record high, and it builds on yesterday's 37% surge that a Medicare payment proposal is seen as a positive for this company, which makes diagnostic medical imaging products. But when you put it all together, our top story this hour is how the latest inflation reading has got to be welcome news for private equity. Because the industry is heavily dependent on debt, the current higher for longer rate environment has been painful, with buyout firms using creative financing to defer interest payments, unable to exit their investments profitably. Even with assets growing, we are seeing lower returns for funds and disgruntled pensions, insurers, and other investors that put their money into PE funds. We're a long way away from the cheap money era, but if the Fed starts cutting rates meaningfully, then perhaps it'll be easier for PE to exit their investments, raise money to start the cycle all over again.